everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, as always, keep in mind that there's risk involved with each trade that you take, so you want to be sure to manage risk in a way that makes sense for you. And also keep in mind that what we cover is not financial advisement, but is coming from an educational perspective. Now, within the WebTrader platform and our mobile app, you'll see that in the order window, the risk management side of things is made pretty simple because it calculates for you your exposure and your potential profit as you set up your trade size and your stop loss and take profit prices. So we'll go over how that works if we find a trade or two to simulate. And also, as we trade within the WebTrader, keep in mind that you're able to use all of those same tools within our app, and that both work on the MT4 and MT5 accounts from our WebTrader and app. And you can switch between if you have both types of accounts from the same location. Now, if we log in the upper right-hand corner here, using our email address and password, you'll be in the WebTrader platform. And we probably should start with kind of the news leading up to today that has occurred this week so far, as we kind of do a fundamental review of things before we go into the specific items of today with the economic calendar and headlines. So the focus of late has been on interest rates out of the US. In particular, the US has kind of been a bit more obstinate, if that's the right word to use, about lowering interest rates back down after having them raised up so high to try and quell the high inflation that was there after the global pandemic. As we go back to that time, inflation had gotten quite a bit out of control, really globally, but also largely in the US. And interest rates had been brought down to zero in the US and even below zero in some countries to try and get through the economic crisis during the pandemic. Well, that had passed, and those low interest rates had caused such a surge in the economy that the inflation rates got really high. And so interest rates were brought back up higher than is typical to bring the inflation back down after the pandemic. And many countries have since lowered interest rates multiple times and gotten rates back down to where it's a bit more comfortable for businesses and home buying and credit card use, etc. But the US over the past 12 months, ever since just prior to the US presidential election, was the last time there was a rate cut, which was surprisingly larger than expected right before the presidential election. Many viewed that as a political move to assist the then Biden administration with the markets surging with the big rate cut. But since then, with inflationary data actually coming in lower than expected multiple times, the rates have not been lowered. And the current administration in the US certainly has made it well known that they would like to see rate cuts and that they disagreed with the non-lowering of the interest rates. And Jerome Powell has been pretty persistent, saying because of the tariff situation and the lack of appropriate data that he wasn't ready to lower interest rates. And so what we had leading up to this week was a big economic summit in a city called Jackson Hole, found in the state of Wyoming in the US. So the Jackson Hole Summit had leaders and important people from around the world, from different countries, speaking about economic policy and specific topics that are of global concern, with AI and the effect on workforce and all of that. And Jerome Powell was one of the keynote speakers, or the keynote speaker, and he surprisingly had kind of a flip in his view and seemed very open to rate cuts all of a sudden. Part of that was probably related to the housing data really being dangerously bad in the US in terms of the strength of the housing market. And maybe finally he opened his eyes to that and kind of came across as if, hey, we're going to cut rates multiple times this year now. He didn't say it exactly that way, but that was the assumption coming out of that summit. and the markets responded quite strong directly during and after his speech and the days that followed. And by the market, I mean the equities market, the stock markets rose up in response to the anticipation that, hey, he's more open to cutting interest rates now. Well, this week we had PPI data that came out of the US yesterday. That's prices that the producers have for things, and again showing less inflation than expected. That has been the trend over the past months without rate cuts coming in, but again that trend continued, lower than expected prices for producers, which means the opposite of inflation dropping even further than expected once again. And now the CPI data is today out of the US. Now, if that data comes in hot, higher than expected, if the consumer pricing index shows higher prices than expected, we could see the market pull way down. We could see the US dollar strengthen and fears come in that, hey, maybe Powell will see this high CPI data and decide not to cut rates, or decide only to do 0.25% cut instead of a 0.5% cut. And so there's a lot of focus on that economic announcement today, the CPI data, because of this huge backdrop of the focus on US interest rates leading up to this moment. And next week is the next rate decision. So it's just around the corner. And so it's very much some nervousness on the markets about the CPI data and anticipation as to what it will show. Now, it doesn't mean that if the CPI data comes in higher than expected that that Jerome Powell will change his mind about cutting interest rates, but the fear will be there about it potentially anyways. So really big focus. That announcement is coming very soon, along with some other data out of the US as well. There's other data out of other countries as well today, but this is the biggest focus of the day in terms of data releases. Now, there were some other concerns that pulled the market down a little bit. And again, it's concerns out of the US. I don't know if you've heard the old phrase, if the US catches a cold, the whole world sneezes. Okay, so that's kind of the case with the tariff situation. There was a judge in the US a week or so ago that proclaimed that all of the tariffs that Trump has been putting on globally, different countries, that they're illegal unless they're passed by Congress, that he doesn't have the power to invoke tariffs on his own, although pretty much all past US presidents have done that, or many of them. So whether it's a partisan ruling or not from an Obama or a Biden-appointed judge is what it was, it still stands until the Supreme Court then can step in and either throw out that ruling or not. So they're trying to rush that case to the Supreme Court. In the meantime, the tariffs can stand, but they've been deemed illegal. If the US Supreme Court doesn't reverse that, then the tariffs will have to be removed. And that the Trump administration already said that would be a disaster because they lose all leverage with all tariff negotiations if they're deemed illegal. And perhaps even billions in already collected tariffs would have to be sent back, is what the Trump administration has said as well. So they're really depending on the Supreme Court to take up that case sooner rather than later. And the current administration in the US is hoping that the Supreme Court sees fit to reverse that ruling from the lower district court. So we'll see how that goes, but that created some nervousness as well. That's kind of died down. It's been out of the headlines as the focus has turned primarily to the interest rate decision next week and this inflationary data, the CPI data that's coming out today. All right, so before we even look at economic announcements, we can look at a chart on gold. We can look at the signals on gold. Why? Because it's a safe haven when there's fear about pretty much anything on the markets. So if there's fear of inflation, they'll run to gold many times, those who are looking for a safe haven to invest in. If there's fear of a recession, people might run to gold. And so whether or not the CPI data is higher than expected or lower than expected, you still could make a case that gold might be a safe haven, because if the CPI data is higher than expected, there's fear that the rate cuts will be smaller. And so maybe people run to gold out of that fear. If there's lower CPI data than expected and there's an increased expectation of rate cuts, well, then people might run to gold for as an inflationary safe haven, because if rate cuts are more likely to happen, well, then you could get right back to a weakening US dollar and prices rising faster than expected. So with all the uncertainty between the tariff situation and the Supreme Court's non-decision yet, and inflationary, non-inflationary pressures, and what will the interest rate decision be next week, and will it be 1/4% cut or 0.5% cut or maybe no cut at all? With all of that indecision, a lot of times safe havens are attractive. Okay, so I'm just making the fundamental case that right now, regardless of how things go with maybe one single announcement, there's a lot of uncertainty out there, at least until the rate decision next week and the Supreme Court decision that hopefully comes soon, as they are expediting the tariff case to the Supreme Court. And so that could come out over the weekend. That could come out at a lot of times. Supreme Court doesn't just work on business days. And so you have to keep that in mind as you look at potential entry points for something like gold. So more uncertainty typically is bullish for safe havens, even if the uncertainty might work for or against the strength of the US dollar. So the signal on gold, if we click here, we have a live signal. We can see it is a buy signal. So that's in alignment with the fundamental analysis I kind of just ran through. It looks like it's hesitating to stay above the pivot line. So what we're seeing is leading up to the CPI data release, which is in just an hour or two, it's testing this support level. It broke below it, now it's back above it. Typically, if it breaks below the pivot level, then the buy signal is off, unless it comes back above. So if it's below, you might put a pending order above, and if it crosses back up, then you're in on the buy. Okay, and so if you're using a technical breakout strategy, that might be one way to trade this, and that is, here's the support level in the signal. Okay, it's right at that price. Okay, it's 36.21 1/4. That's exactly where we are. I mean, it's literally right on the pivot support line. And why is it a support level? Because it was resistance here. It broke above and then became an area of support that the market stayed above after it had broken above that price. And so this is an area of support that it tested and now went right back above, and it's just sitting right there at that pivot level. Because we don't know what that announcement will bring in just an hour or two's time, maybe it's not a good time to follow this technical signal, because there's so much fundamental momentum that could hit depending on how that announcement comes in. Okay, and then we're looking into when will there be news about Supreme Court and the tariffs and on. So for a short-term move, if there wasn't a big announcement coming, I might trust this support level and buy with this signal. Okay, but because there's fundamental news, I've got to filter that news into how I feel about this support level in this signal. So at least we see that there is a buy direction is the preferred direction here on the signal. So from a technical perspective. So now we have to evaluate what might you do here. Before we looked at the signal, we already felt like in the summary that the fundamental news with expected rate cuts, fear of tariffs, Supreme Court situation kind of lends itself to people maybe leaning towards a safe haven. So if that's how you feel fundamentally, that better than 50% chance that there could be some fear on the markets in the next 24 or 48 hours, then maybe you feel that you trust this support level, even if it breaks temporarily, that we'll end up back above and pushing towards these resistance levels up here, either this level or this level. Okay, and I can draw a lower resistance and I can draw the all-time high, which is the upper resistance up here. Okay, so as we then look at entry point and risk management possibilities, if you believe gold makes sense to buy on, then you have to look at, well, how do I go about buying on gold right now? What's the best way? Because there's a big announcement coming. If you try and use a stop loss type risk management, and just put your stop loss below the support level down here, you easily, as those numbers could come in for the US CPI, you could see this spike up, spike down, spike up, spike down, and then find its direction, whichever way that would be, after the high level of volatility calms down, after the smoke clears, so to speak, as the data comes in. Okay, so a short stop right before major announcements many times isn't a good idea. If you had a longer stop and you were more patient in the direction, but then you're risking more with the longer stop loss for any given trade size. So one idea with this is to use AvaProtect as your risk management. So if I want to protect just past today's announcement, I can protect by the hour. If I want to, and right now it's only offering me 1 day and 2 days. Sometimes you have protection schemes that it allows you to protect for 1 hour, 2 hours, 3 hours. It depends on the market situation and the instrument that you're looking at. Right now I can protect by the day, 1 day or 2 days. I prefer on a Thursday especially to protect for 2 days. Why? Because it's 2 business days. And that takes me through from today to Friday and from Friday to Monday. So I get protected for the entire weekend from today all the way till Monday at 5 p.m. And it's for 2 days cost compared to 1 day. So, and you see 1 day is 4,764. 2 days is not that much more, only about 1,000 more. So doubled the time in terms of trading days, but actually 4 times the length of days because it carries all the way to Monday through Saturday, Sunday for just a little bit more than the 1 day cost. So it's a no-brainer to me to go 2 days. Now I need to pick the trade size that's right for me in terms of the cost. So if I do, say, 1 lot, now it only costs $2,300. If I do 0.4 lots, okay, that's getting closer to where I'm comfortable maybe with my risk management plan. If I'm comfortable risking a certain percent of my account per trade, maybe I know I want to risk 1% or 0.5% or 2% per trade, whatever that is for you. So if I was 1%, that's around $616. So I know I need to lower my trade size just a bit then. If I do 0.3, it's 690. If I do 0.2, 0.25, 0.27, I'm just zeroing in. And so 0.26 looks like the sweet spot. That's less than 1%. 0.27 is slightly more than 1%, but almost exact. I think I'm comfortable with that. Okay, so I'm sitting on about 1% risk. Now the question is, where would I take profit? If the CPI data really does create momentum back up with gold, then I don't see any reason to take profit so soon here. I think it could easily reach this first resistance level and maybe the second, which is the all-time high. Okay, so if that's how I feel, that by Monday at 5 p.m., it could reach one of these resistance levels, let's see how much profit that would be. If I put my take profit at 36.57, with this trade size, I'd be making 948. It's not enough for me because I'm already paying 621 up front. I would like a larger potential profit. So I'm actually looking at this resistance level here. If it gains momentum, why wouldn't it challenge where it was just a couple days ago? Okay. So we're looking at the all-time high range. Just before that would be like 36.72. Okay, now I'm looking at trying to make better than double the cost of the protection. So if I'm right 50% of the time with this type of setup, I'd have a small profit still. And if I'm better than 50-50, I'm making a better profit. Now, I also could suggest to myself that if it does challenge the all-time high, that means it has a lot of momentum. Maybe it will go to the next, what you might call round number, which would be 3,700 is the next round number, which is here. Okay, so if it's going to break the resistance here at 36.70 something, perhaps it will then push itself to a nice round flat number like 3,700. And since you have all the way till Monday at 5 p.m., my time anyways, it'll show for your time in the expiry date and time for your protection, then I might as well give myself the opportunity for 3,700. Okay, now it's really starting to look better. Only need to be right one out of what 3 or 4 times to have a profit with this type of setup. And if I see that it's in profit somewhere before that take profit, and I like the amount that it's showing, then I can go ahead and manually close it anyways, or do a partial close. I can close half of it or a third of it, and move my, and set a stop loss then to protect the rest of the profit at a certain spot as well. So there's some things you can do with risk management as it moves along. But because you have a long period of protection, you might as well give yourself a high ceiling for the take profit, and you can always close early. If it's at 36.90 or 36.75, and you decide, well, I'm okay with that profit, and then you can go ahead and close it manually if you wish. Okay? And so I've got this set up. I don't have a stop loss set yet. I don't need it because I'm protecting it with AvaProtect. As it gets near the expiry time, then maybe I add a stop loss if the trade is still running at a spot that would make sense for me. So with that said, it's all set up, small level of risk for my balance size, around 1%, trying to make almost 3.5%, something like that profit with much less cost for the protection. Okay, so that trade is off and running. What's the fundamental reasoning again behind this move? It's a lot of uncertainty on the markets with tariff fears, with rate decision next week out of the US, and a big announcement coming in less than a couple hours. Okay. Any questions, comments on the risk management, on the use of AvaProtect? I'll pause for a moment. Okay, I don't see any questions popping up. So let's go to another method or way of using fundamental analysis within our platform and app that can help you make some decisions as well. So we did a preemptive trade here based on larger macroeconomic events like rate decisions, tariff decisions, etc., and basing, which way do we think the wind might be blowing, so to speak, with something like gold based on those larger events that have been ongoing. Now we'll take more of a micro view of an exact announcement on the economic calendar that you can trade off of that exact announcement at that exact time. Okay, diversifying the way that you use fundamental news and the type of fundamental news that you can trade on. So inflation rate coming out of the US, we talked about that. That's the CPI data that's coming in. And if we look at the year over year, a lot of times you get a nice response with USD dollar pairings as that comes in. And so we have a nice tool in our economic calendar, this volatility tool, I like the best. If we then want to look at how has the movement of the Euro USD or any USD pairing, how is it moved into relation to how this announcement comes in specific time periods after those announcements. So if we're looking 1 hour after the event, and we say if the inflation rate data comes in above forecast, okay, what they call hot, if it comes in stronger than expected, meaning, wow, there's stronger demand in the economy than expected, the inflation rate actually went up instead of staying the same, or maybe exceeded the expectation. Even if it doesn't go up, maybe it didn't drop as much as expected. If it comes in above the forecast, how has the Euro USD moved in the past? And we can see it happened 3 times. Not a lot of statistical advantage one way or another in the first hour. It went up twice, it went down once. The one that went down more than the ones that went up, but it did go up twice and only down once. So this data doesn't convince me of anything, okay, with it coming in above forecast 1 hour after, maybe 4 hours after. Still not convincing for me. 1 down, 1 up, and 1 barely moved. It went down, so the percentage looks nice, 2/3 down, but it barely dropped here. So When it comes in above forecast on the year-over-year inflation rate, not convincing to me. What about if it comes in below forecast? Okay, that's a little stronger. It's 60% up and 3 solid upward movements with only one that went down that size and one that barely dropped in the hour that followed. So it looks like if the inflation rate comes in below forecast, okay, missing expectations, the USD weakens pretty significantly compared to how much it strengthens. So, and that makes sense to me because rate cuts would be expected more and the USD would weaken in response maybe to that data. So without having to guess, I can say if this comes in higher than expected, I'm not interested. If it comes in lower than expected, on the Euro USD, it looks like if I can catch a nice low entry point, I think more times than not, at least in the past, the Euro climbs against a weakening USD in the hour following that announcement. What about 4-hour time period? Wow, it's even stronger. Okay, so now I have a better trading plan. I'm not just going to wait an hour. I'm going to try and get in the first 5 minutes because the movement is on average only 21 pips in that first 5 minutes. And by the way, it doesn't take 5 minutes to place a trade, right? 5 seconds really. If you have the trade ready to go, knowing that I'm only interested in the buy direction if this comes in low. And so if it comes in below forecast, boom, I just have to click buy if I like the entry point. Could be 5 seconds. I could wait a minute or two to see if it pulls down, knowing that I want to find a low entry point to buy if this comes in below forecast, because in the past, after 4 hours, it's been almost 100% upward movement with only one time that it went down. And it didn't go down as much as the upward ones went up. So it went down 1 out of 5 times, 20%, which isn't very significant, but it percentage-wise in terms of pip movement, it's even less than 20%. It's maybe 10% of the pip movement was down because it went down only 1 out of 5, but when it went down much smaller as well. So it went down a lower percentage of the time and a smaller size movement in terms of number of pips on average. So a lot more upward movement in the 4 hours that follow if this rate, if the inflation rate data comes in below forecast, okay? Much more interesting than if it comes in above forecast, which is 50-50 mix in terms of how many pips movement went down compared to up, okay? So you can have a trading plan. I'll only buy on this, and only if it comes in below forecast, and only if I can get in within the first 5 minutes with less than 21 pips climb, and preferably with a spike down. And then your trading plan is I'll stay in the trade for up to 4 hours, waiting to see if it'll come up, maybe pick an average movement here of 40 or 50 pips, where the highest one went up near 100 pips. And so going after maybe 40 or 50 pips climb with maybe your stop loss no further than 20 pips down, something like that, because the one that stayed down went 30 or 40 pips. So the ones that ended up going up in the first 15 minutes didn't even go down. So a short stop, you'd have still been in on all the ones that climbed. So 15, 20 pips down. You can get your entire trade plan for this announcement done based on the past statistics. Very simple to do, but very powerful information that would take you literally hours, if not days, to go back on all the old charts to find the dates of the past announcements and to see how much movement was on the chart right after the announcement and in what direction. It would take you forever to try and do that. So that's compiled for you here with this simple tool. A lot of information showing you what you would need to know to do a data-driven type trading strategy, okay? And so you can go through each week and pick out what you think are the big announcements, and they're labeled high if they have high importance, and have a trading plan with 4 or 5 announcements maybe that you think the statistics look the strongest for the week, and take your shot on each of those. And you can do that over the weekend before the trading days even start, and have that mapped out for times that you're available for announcements. And I would say don't give up if you lose on the first time you try it. I would try each of these announcements maybe 10 times or more and see, did I win in the end more than I lost after giving it a good number of sample size attempts, okay? And so you'll notice that these announcements each week, each month are repetitive. You'll get to try the same announcements again and again. And if you're using limited risk each time, you know, you're not going to blow your account trying this. And if you do proper risk management and see how you can find the ones that work best. And then you add that to your trading strategy list. So you can trade on the bigger ticket items like we did with gold. You can trade on individual announcements like we're showing here. And trust me, there are lots of them. We can look at tomorrow and we can see more announcements. Here's some out of Great Britain. Industrial production, GDP. If we look at industrial production out of Great Britain, sometimes the time frame matters, okay? If this comes in above forecast, 100% up, okay? So industrial production, month over month, if it's above expectation, all 3 out of 3 times after 4 hours, there was upward movement. After 1 hour, also upward movement. Average range movement, 26 pips. After 30 minutes, you see you've had a chance to get a low point. What about the first 15 minutes and 5 minutes? You see, you have time to get in on these. This barely went up even 2 pips, 3 pips. This one went down. This was only up. This is the one that took off. So in this event, maybe you didn't trade if you didn't get a good entry point. These other 2 you could have gotten in on. And after 4 hours, look how much the one went up. You'd have had a huge profit, 121 pips. And after 1 hour, this one was up as well. They all were up. And so you can have a trading plan for each of these announcements to understand which direction I would prefer to trade. And we didn't even check the other direction. If it comes in below forecast, look at the majority, 2/3 down. After 4 hours, 67% down still. Okay, in the first 30 minutes, that looks like the sweet spot for this announcement, 30 minutes. If it comes in below forecast in the first 30 minutes, look at the movement down compared to up. So you try and get in that first 5 minutes. If it's, you know, average range movement, only 14 pips. And again, it doesn't take 5 minutes to place the trade. So you might have gotten in up here on almost all of these. And after 30 minutes, look at the downward movement, or an hour or 4 hours, etc. Average range movement here, 26 pips after an hour. Okay, so you got all the statistics here to go through and pick which announcements for the week you'd want to utilize. And I've seen a lot of strong statistics out of Canada, out of Great Britain, out of the US, etc. Okay, I'll pause for a moment. Again, any questions, comments on using the economic calendar? Okay, I must have been clear. I don't see any questions popping up, but it looks like nobody has dropped out yet, so it must be interesting enough. Let's go to the market buzz. That's another area, market buzz, that you could do another strategy for fundamental analysis, again, without leaving our platform or app. So what we're looking at here is every instrument we offer, whether you're trading cryptos, if you're in an area where you can, commodities, currencies, etc. You can find the most recent news that is pulled from all over the internet, different sources, okay, whether it's social media, business websites, etc. You find it here. So why all of a sudden are certain names the biggest circles? You know, Oracle, for example. Usually it's Tesla, it's Google. All of a sudden Oracle has 2,796 mentions found online recently. Okay, we can click and see, well, what's going on with Oracle? Not only do you get the news, but you get a price target and a trend analysis. So the signal here, if you click on this, is that Oracle will rise and go up to this price zone up here. We can click on it and expand it. It looks like 383 per share is expected potential price rise from where it is now. You also see there was a gap up yesterday. Okay, you see this gap. It jumped something like 30% yesterday, Oracle. So Huge gap up. That's a sign of positive news, upward momentum. Why did it jump from, I don't know, 240 or 250 or 260 all the way up to 328, where I think it closed yesterday? Well, we can read the news and find out. So if we get rid of this expanded chart, we can take a look. What's the most recent news? Well, they're mentioning that for a brief moment yesterday, the owner of Oracle became the richest man in the world, richest person in the world, surpassing Elon Musk briefly. There was a slight pullback in that big jump, and all of a sudden when the share price came back down a bit, Elon Musk was again the richest person in the world. But here, how did Oracle co-founder Larry Ellison beat Elon Musk to become the world's richest person? If you read the article, they're going to tell you about, he's a 40-something% shareholder in Oracle, and they're going to tell you the story about what happened with Oracle. So you can click it, you can read the entire story and find out what happened. Read the whole article, you'll understand why Oracle's price surged. They have a business partnership or deal with OpenAI that's going to bring them a lot of business. Okay, we're talking like hundreds of millions in business, that there's some sort of agreement. So you can read through these articles and find out what exactly happened and why did their price surge and what's the expectation moving forward. And I'm looking, there was just 3 hours ago, and they're time-stamped, so we can look and see the most recent stories here, from boardroom to billions, inside Larry Ellison's 41% Oracle stake, and how he briefly became the world's richest. And you click on that, they'll talk about exactly what happened here. Oracle sourced 36% on OpenAI's US $300 billion, not million, $300 billion promise. But who's paying the bill? So we can click, we can read the story and try and understand better why it soared yesterday 36%, and see if you think that means it should keep going up or not. Okay, and so once you read these articles, then you'll have a better understanding of whether you trust this signal that says, hey, not only did it go up 35% yesterday, but it's expected to go up another 16.9% up to this price zone sometime soon. Okay, from a technical perspective, that's what they're seeing. You read the articles and decide if fundamentally you think the momentum should still be there. Now, Oracle can't be traded on right this second because it's a stock and it's only tradable when the market is open for that stock. So it's a US stock. So when the US market comes open, then you could trade on this particular instrument. So what we see here is the gap up yesterday. It continued to climb. So there wasn't an immediate pullback. And in fact, it never re-entered the gap. That's the sign of news that really is real news. It's not hype. Usually if it's hype, you see a big gap up like that, a huge percent gain. You see eventually it comes down and re-enters that gap and starts to pull back some. It did not happen yesterday. Now, when the US market opens today, if you read those articles and you decide either for or against Oracle, you know, if the articles lead you to believe that, hey, it's overbought now and there's probably going to be a pullback, then when the market opens, you could have a strategy to say, if it re-enters the gap, I'm going to have a pending order here. If it re-enters this gap between the closing price here and the opening price yesterday, then I'll trade the gap. Meaning if it enters the gap many times, then it tries to fill the gap. And so you could have a pending order if you read the articles, and the articles lead you to believe Oracle's overbought now, that this was an overreaction. Then your preference then would be, if it enters the gap, maybe to have a pending order to sell, and maybe even halfway down the gap, have a take profit without having to fill the gap completely. Because it is good news, even if it was an overreaction. So you expect some climb in price value to hold because it was good news. But if the articles tell you it was an overreaction in terms of share value, now you might expect some pullback. So this is a strategy, trading the gap. It's a technical strategy, but only if you read those articles and they lead you to believe that Oracle's overbought now. I did see something alluding to something like that in one of those articles, but I would suggest read it for yourself. Now, if the opposite is true, if you read those articles and the preponderance of the information in those articles leads you to believe that, hey, Oracle could follow that technical signal. The technical signal shows, well, 16.9% further rising expected. If that's the case, and that's what you believe after reading the articles, then you might, depending on where this opens, if the price opens above the support but closer to it, maybe you take a buy position and put your stop loss below the support. Okay, if you believe what you read is more positive than negative. And in that case, then you're waiting to see what the trend does at the open price, and then responding accordingly, maybe with your stop loss down into the gap, knowing that if it enters the gap, maybe you want to get out, because then maybe it tries to fill the gap. But as long as it stays above this open price from yesterday, then perhaps you stay in on the buy. If those articles lead you to believe that the price really should follow that technical signal and rise, whatever it said, 16.9%, something like that. So that's the power of reading the fundamental news, though. I would read the articles, then decide whether I'm convinced about that technical signal or not, maybe. Or maybe I want to do the opposite and trade the gap. And by the way, you can do both. You can have a technical strategy that if it breaks the support, you have a pending order to sell. And at the same time, if it looks like it might bounce, you can do a market move to buy. You can buy on a market move, put your stop loss down here below the support level. And if it breaks the support and hits your stop loss, then boom, you're in on the sell. So you can do a market buy and a pending order sell in case it does reverse and move into that gap. And it's a 1-2 move that in this case could make a lot of sense, because I believe there could be a pullback into the gap, but I also believe this is truly good news and eventually could lead to further price rising. We'll see what the trend is at the open to decide whether you have an entry point you like for trading on it or not. But this is another style of trading that you've read the most recent fundamental news. Now you got to wait for the market and see, is the price right to trade on it or not? Okay, and it doesn't have to be Oracle, by the way. It can be any instrument in the market buzz. You can read the most recent news and see if it convinces you to trade one way or the other. I mentioned Oracle because it had such a significant move yesterday. And if you see a chart like this, you probably want to look in the market buzz and see, okay, what happened here? What's the news that caused that? Because that's not a pure technical move. There's something fundamental clearly caused that gap. And we see what the story was. It's a big deal, contract with OpenAI, potentially, etc. Okay? Any questions, comments before we end things? Okay, great. I don't see any questions popping up. You're welcome to contribute with your thoughts, to request instruments to look at when we do these sessions if there's something specific you want to see. But thank you all for attending. I'm going to go ahead and end the session here. There'll be some, like I said, big announcement coming with the CPI data out of the US and some other data released as well at the same time. So I think we'll see some big movements on some of these charts. Just manage your risk on the downside, and I think there's some great opportunities for you to go after today. All right, everybody, thank you for joining, and good luck with your trading.